Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 5th of September. US non-farm payrolls miss estimates, but dollar bulls remain in charge. The US labor market posted decent gains in August, though the employment report was somewhat weaker than anticipated. Non-farm payrolls rose 151K, missing the forecast of 180K, while July's number was revised up to 275K from 255K. Average hourly earnings slowed down to 2.4% from 2.7% previously, while the unemployment rate failed to decline as expected and instead remained unchanged at 4.9%. The dollar weakened against its major counterparts immediately after the release, but found fresh buyers and recovered most of its losses in the following hours. In our view, this reflects the fact that even though the report missed its forecasts, it was not soft enough to materially alter investors' expectations for a Fed rate hike this year. Indeed, the market probability for such a move declined only slightly following the jobs data. Moving forward, market focus is likely to remain on incoming US data heading into the September FOMC meeting, and particularly on retail sales for August coming out next week, as well as speeches by Fed officials. Any comments that the August report showed sufficient jobs growth to be consistent with a potential September rate move could raise the likelihood for a hike as early as then. Overall, we maintain our view that both September and December are realistic candidates for the next rate hike, though we see a much higher likelihood for December. Employment growth has been strong lately, and there are signs that Q3 GDP will rebound strongly. However, the latest tumble in the ISM manufacturing PMI, as well as a flat core PCE rate in recent months, could provide enough reasons for the committee to be patient, we think. As for today, during the European day, we get the final service sector PMIs for August from several European countries and the Eurozone as a whole. Given that these are expected to confirm their preliminary estimates, any reaction in the euro may remain muted. The bloc's retail sales for July are coming out as well. From the UK, we get the services PMI for August. The index is expected to have risen to 50 from 47.4 previously. Following the positive surprises in both the manufacturing and the construction PMIs for the month, we see a high likelihood for this index to follow suit and rise sharply, perhaps enough to enter the expansionary territory. We believe that the Bank of England's August easing measures, as well as the possible restart of postponed projects, are likely to have boosted sentiment among service providers. A marked increase in the index could extend the pound's recent gains. Markets will remain closed in the US and Canada in celebration of Labor Day holidays. On Tuesday, during the Asian morning, the Reserve Bank of Australia will announce its policy decision, and the forecast is for the bank to stand pat after cutting rates at its latest meeting. On Wednesday, we have two major central bank meetings, Sweden's Riksbank and the Bank of Canada. Both banks are expected to remain on hold. From the UK, we get industrial production for July, while Bank of England Governor Carney will testify before Parliament. In Australia, we have GDP data for the second quarter. On Thursday, the highlight of the day will be the ECB policy decision, followed by a press conference by ECB President Draghi. The ECB held off from announcing any new stimulus measures in July, despite the Brexit outcome, and instead noted that it prefers to wait until September, when it will have the new staff economic projections. Nevertheless, we don't expect any fresh stimulus measures at this meeting, and thus the focus is likely to be on Draghi's press conference and the updated economic forecasts. Finally, on Friday, Norway's CPI and Canada's employment data, both for August, are due to be released. We also get China's CPI and PPI data for August. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros. Senior Analyst at IronFX, wishing you solid trading.